That's the fancy word economists use to describe an economy in a state of very low growth and high inflation. South Africa is an apt candidate, given that average economic growth for this year is expected to come in at 1.5%, while the Reserve Bank expects inflation to average 6.2% this year.
You want an environment of real GDP growth, and that's only achieved where inflation is below your actual GDP growth levels. To achieve that, we need to make sure that our country output as such, our business output is increased. And that's not what we're achieving in the short term. So short term, our view is that GDP more or less remains constant. It's going to be under that 2% mark, but it's not good because our inflation will remain just under 6%.
While South Africa's economy grows at subpar levels, other sub-Saharan African countries are galloping ahead, with growth rates in excess of 6%, not uncommon. This has led to South African firms taking an interest in investing north of the border. COFACE is looking to expand its services in giving potential continental investors information on the African territories they're thinking of operating in, and also providing trade credit insurance, which basically insures businesses against non-payment by their business partners.
We're bridging this gap to make sure that we secure that type of risk so that the entities and the businesses can start to trade and then grow the economies in Africa.
COFACE noted that foreign direct investment levels in South Africa substantially lagged those of their emerging market counterparts, attributing this to a lack of investor confidence in the potential rate of return on their investment in South Africa, especially given current weak economic fundamentals. Nompumelelo Sisiba, SABC News, Johannesburg.